Hello everybody, welcome to another update on the Gold Forecaster Index, the holy grail to predict gold prices. In the last video I said that gold would go higher and that banks would go lower. So let's see what happened. Okay, so gold did go up, but it has retraced now, so actually nothing happened. But banks, as you can see, are crashing. Bank of America also crashing, JP Morgan crashing, Wells Fargo crashing. So that was a good call. Let's take a look at the new data points of the gold forecaster index. As you know, this is an index that's comprised of leading indicators, and that's how we can predict the gold price. So the latest data point is pointing even higher. So I expect that gold will keep on rising. This is the same as the last time. Misery index is still rising. We have real output improving, but this is just from Q4. Chile, we know that Chile had lower production, so that will be good for silver. GLD institutionals are buying, so momentum is higher. The same with COMEX. There's a huge rise here. So interest is coming back to the gold space, which is looking very good. This is still from February. I still need to find new numbers. SLV is also rising. Interest is coming back from institutionals. So it's looking very good for gold and silver. And let's take a look at premiums. Okay, so the US mint sales were also very high from last month. Gold is back, people. Premiums are up. So that means that this is probably a bottom and it will go higher. So that's for silver. Upmex, I think Upmex was somewhere here. So also the junk silver premiums are higher on Upmex. All looking very well. PSLV premiums are now positive, so they have gone above zero. Looking very great. Only the COT report was not that good yet, so we still need to have some shorts to cover. So they will probably try to crush the gold and silver price, but it won't work because hedge funds are going in, and there's a lot of interest in gold and silver right now. Lease rates were also very good for silver especially. When you look at the silver lease rates, they are all above zero, and that's a good sign. Swiss franc also rising. TIPS yields are not that great because we have indeed an increasing bond yield. You could see it as positive because that means that there is inflation. And bonds are typically the anti-gold. So if bonds crash, then gold goes up. Now we are now in April, and that means we are at the bottom. So now you need to go all in gold because it's just going to rise higher. Silver, yeah, silver is seasonally not that good, so I prefer gold at this moment. Technicals, we have cup and handle. and going higher. And Charles Nenner says that gold will keep on rising in the coming years. Same here, stocks will go down and gold will go up. So it looks very easy, just buy more gold. On the copper side, we can actually see that there is a bit of weakness. China power consumption was actually very good. So China is actually benefiting from the problems that we have in Russia. Shanghai Composite Index was also up. GDP forecasts are up. Copper scrap premiums a bit elevated, so there could be some weakness in copper. And we're also here on the top in April, so maybe copper should retrace a bit. But we also have low supply, so it's a bit positive and negative at the same time. Australian dollar was very good, was rising. So I think commodities, yeah, we are definitely in a commodity bull market. Dry bulk was also going up. Yeah, Dani I will talk about later on. Yeah, on this chart here, you can see that growth is slowing. Okay, so the weekly economic index is slowing. This is still below zero. So yeah, we're still in stagflation. Leading indicators pointing lower. Here you can see we are almost going into recessionary territory. So that was the recession indicator. Deposit over loans. So you need to look at the loan chart here. And the latest data says that we are topping out here, but the trend is still okay. I don't like to see the deposits going down because typically that means that loans also go down. So I would not buy the banks right now. That's not a very good idea. Central bank balance sheets. Yeah, we are in tapering. So this line is topping out right now. So that's also not good for banks and stocks. The amount of cash is declining. So yeah, they will need to issue more debt at some point. Let's take a look at the junk bonds. Junk bonds are pretty okay. Maybe it went too high, so it could go down again. GDP is apparently rising, but topping out. So there could be some weakness in stocks. This is a new update on the international investment position, and it's not looking good. This is just crashing. The US has more liabilities than assets, and this is not looking great. So I think USA is in big trouble at the moment. Debt is also rising, and foreigners apparently don't like to buy the US debt anymore. Here you can see that the amount of foreign held US debt is declining as a percentage of total debt. So the foreigners don't want to finance USA anymore. And why? Because the trade deficit is rising. Look at this. The latest number, record trade deficit in February. So this is the goods deficit. The services, yeah, services is still in surplus, but also declining. So it's not looking great. Look at this. It's crashing. This gap has still not closed. And you can see here inflation. Export and import prices rising. We are still in an inflationary crisis. Or you could call it stagflationary. So gold is looking very good. Let's take a look at the 2-year bond yield to see how many rate hikes that we will get. And it's still rising. So the Fed really needs to start hiking rates, maybe by 50 basis points, because this is getting out of control. Too much inflation coming. Capacity utilization still rising. So the inflationary pressures will only increase from here. Okay, so let's take a look at some of the posts. Lithium is doing very well. Spodumene is already at 5,000 per ton. And in April, it will go down a bit, but the shortage is expected to reappear in May and June. So keep on buying that lithium, it will go higher. Ukraine, we got an update on the grain shipments, and they were 4 times lower in March compared to February. So that means there is not a lot of grain available. No grain exports. All the grain is sitting in Ukraine and cannot leave. Okay, that's what's happening now. And grain, I think that the grain sitting there will go bad, and then you will need to grow more grain outside of Ukraine, and you will need a lot of fertilizer for that. You need potash, and I think also the potash shipments are falling off a cliff. So I think fertilizers are still the place to be. And we have the Verde Agritech as a fertilizer company, which is in Brazil. Also very interesting is that Brazil is now oil self-sufficient. So they have no problems at all with oil. And the largest cost of Verde is, of course, oil, because they need to truck the product to the farmers. And if oil goes down, then that will benefit Verde. And Brazil has enough oil. Now, we are now in stagflation. So what is going to happen? We are going to see consumers altering their behaviors. So, of course, everyone needs to eat. So food will go up. They will pay for higher food, pay for higher heating oil and gas. So these are the most important. You should invest in these things here because the demand will only increase for these. Demand will go down for these items. Clothing, nobody will buy clothing anymore. Travel, forget it. They have no money to travel. Gym, sports, no. Electronics, going on holiday, I don't think so. So avoid these areas and invest in the necessities, food and energy. Yeah, Danny did some updates. So this was the old chart. Stocks would rise 20% to 30%. Then we see that Yardeni upped the forecast here to 6,000 by next year. But then he decreased the forecast a bit. So we are still going to go higher, but only by about 10% next year. Could also be flat. So it's not looking that great for stocks. So you can expect some volatility. The US dollar is losing its reserve currency at this moment. And you can see that here. So the Koffer has gone to the lowest on this chart at 58.8%. Japanese yen is increasing and the euro is stable. As I said before, we should be in commodities. We are just starting here. A lot of upside to come. Okay, we had an FOMC meeting and you can see here the old dot plot was like this. And now they want to hike interest rates. I think they should hike interest rates, otherwise we will have a lot of inflation. Some info on the deficits that we are seeing right now. So we have deficits on aluminum, copper, zinc, and nickel. So we are invested in all of these: Rio Tinto, Capstone Copper, zinc I don't have anymore, and nickel with Eramet. So you can see that stock levels are very low, especially for nickel, which keeps declining here. Nutrien had a strike at the Canadian Pacific Rail. I think it's now resolved, but you need to keep this in mind. These strikes can come back. Talked about China power consumption. China is doing really well. So this is almost a record growth rate. And I think that China is actually benefiting from all of these problems that we see. Russia is going to supply cheap goods to China. And Europe and Russia are the ones that will suffer from these embargoes. You always have the three dogs, two fight with each other, and the third wins the bone. And the third one, I think, is Canada, Australia, Brazil, and China. This was a very interesting chart. So Charles Nenner saw a point where the three cycles all topped out. So the long-term cycle is stopping, the mid-term cycle is stopping, and the short-term cycle is stopping. So this almost never happens, maybe here. And what happened here? We see a crash in stocks. So I think that this could lead to something very bad coming. Well, you need to monitor this. Okay, so we will end with the plan of Russia. So there's a very interesting article here that you can read yourself about Russia's plan. And in conclusion, the supply chains are collapsing right now. And it happened starting in March, so last month. So what is happening? You have European ports that ban import and exports. Rotterdam, Antwerp, Hamburg. Azov and Black Sea, that's around Ukraine, are closed. Also, St. Petersburg is closed, which is actually in the Baltic states there, in the north from Russia. Some of the container shipping companies are suspending cooperation with Russia. So these are the container shipping companies, which are 95% from the imports to Russia. Air freight is also closed with FedEx, UPS, DHL. And railway and automobile routes are closed at Poland, Baltic states, and Belarus. So everything is closed. Ports closed, containers shipping closed, the air is closed, and railway and automobile routes are closed. Everything is closed. So what are the consequences? Higher rates for transport, especially for China, because China will take all the demand right now. So Chinese freight rates are going to increase. Trade will increase between Russia and China. China will benefit. And we will see a lot of inflation, price hikes in uranium because Russia is an exporter of uranium. Coal, we just heard about the banning of coal to Europe, which is a very stupid thing to do, but they are doing it. Oil products will go down. Natural gas, forget about it. Metals like nickel, no more. Then you have neon, which is also going to give problems for chips. Timber, no more sunflower oil. So our French fries in Belgium cannot be fried anymore because there's no vegetable oil. Fertilizers, potash, no potash anymore for Brazil. Grains, the grains are just sitting there in the warehouses and it's not getting out. So everything is collapsing. And you need to bet on the right commodity companies. There are winners and there are losers. And you need to be in the winners. So that was the update. And I'll see you in the next video.